What I want to talk about today is funded accounts and prop firms, and why I think people that are trying to trade this way and make money or become profitable this way is fucking retarded. And I don't really understand why in the actual fuck they're doing it. And so for the next couple minutes of this video, we're going to go watch this guy named Tweakin' Trades. This is a perfect example of what not to do.
Instead of my normal trading recaps, I decided to do a little experiment with this prop firm Funded Next, where I wanted to see if I could force my way to get a payout with them in 4 days. Now, how can someone like me,
Fucking retarded, right off the bat. You're going to try to get a payout within 4 fucking days? Yeah, that's intelligent. Let's put a timeline on it, really. Let's do that.
who's been failing to get a payout from prop firms over the past year, try to get one in 4 days? Well, let's just say it's gonna take some luck, and prop firms over the past year try to get one in 4 days.
What the fuck is he doing then, man? You've been doing it for the past year, and dude.
Well, let's just say it's gonna take some luck and a little bit of degen trading, because
It's going to take some luck and a little bit of degen trading. Are you fucking kidding me?
instead of forcing myself to be disciplined, I decided to take a little break from that and just let my inner demons take control of everything to see if maybe I can get a payout. This basically means I'm not gonna have any rules or setups to control how I trade, so yeah, this is just gonna be straight chaos, huh? But now that you know the game plan, what are the actual odds I'll be able to get a payout? I think realistically, I will be able to pass at least 2 evals, but on the funded part of this challenge, I will probably end up just blowing any funded account I have in the first day or two, but fuck it, we ball.
But fuck it, we ball. Yeah, that's how you do it right there.
To kick off this trading challenge, we have this first eval where I decided to try and pass it by trading gold during the Asia session, which yeah, is the same session. I kind of gave up trading because I'm trashing it, but like I just couldn't wait till New York session to trade. So
I'm sorry, you said you're trash at trading a certain session. So what the fuck does the session have to do with anything? Like, you're not, like, this guy's just going completely off of luck. Like, he's not, I mean, like he said, man, he's not doing anything correct.
So here we are sitting in a short of 2 minis on gold, and low-key this shit did not want to sell off because we would get a drop and then that would get...
What is this fucking structure of a trade? He's risking 1R to get 1R? What the fuck is this?
Get bought up, but then the same candle would get slapped down just to get bought up yet again, so I was losing hope of selling off. However, we were staying below the 1 minute moving average line, so I held on and low-key thought for a second it would work out with another candle getting slapped down. Unfortunately, price decided to bounce up, and this time we broke that 1 minute moving average line, so I was like, yeah, this is cooked and built up for a fat loss. With that, I had like 400-ish bucks left of drawdown, so I decided to switch up to catch that pop higher since buyers...
He immediately goes back into position, but he reverses his position then, essentially. Okay, let's just, I've never watched this, but let's see how this one works out. I won't even edit this out if I'm wrong.
Were so stubborn. With this heavy sided note, I really couldn't afford too much of drawdown, and yeah, price dipped lower just enough to trigger that max drawdown on the eval, meaning I failed this first eval attempt.
Yeah, because you're on the fucking 1 minute chart and you just reversed your fucking position in a choppy market. Like, I don't...
If you were curious, the price did end up popping up to my target, so if only I had enough drawdown, we would have freaking passed.
Yeah, man, I bet you would have passed that and you would have been a profitable trader in the long term. So, anyways, the next person that we're not going to watch, but who I'm going to showcase is Diego Berra Trades, and we are going to use him as an example because I've been seeing a lot of these kind of fucking videos pop up on my YouTube lately, and every time I see him, I'm like, man, this guy's doing really good. You know, it looks like, it's like, you know, he knows how to trade is what it appears to be. Because, I mean, anybody that's posting 417 fucking trading videos and is literally every single video, he's on a funded account, by the way, or trying to get funded. So it's like, all right, he probably knows what he's doing. Well, that's not fucking correct. You know, one time I even asked this fucking guy and he replied. One time I asked him, what is your win rate and what is your expectancy? Because any good trader that is profitable and statistically knows what they're doing is going to know what their win rate is, and they're going to know what their expectancy is. Like, those are two core foundations, two core pillars of being a profitable trader right there. And so I asked him that, and motherfucker said, I don't know. No idea. You're telling me that this guy every single time he posts one of these videos, or every single time that he wants to get a new funded account, you're telling me that this guy goes to, probably not Breakout Prop, but he goes to a little prop shop, buys a funded account, and then tries to get funded. And let's say he's doing it with a 25K account. This motherfucker is literally spending $275 every single time. And from what I've seen, these people blow up very, very quickly. A lot of the time, I don't can't objectively say Diego Berra blows up very, very quickly. I would assume that he probably does if he doesn't even know his fucking win rate or expectancy, but I can't objectively say that. So anyways, I've been seeing this guy trade, and a lot of things have been popping up on my YouTube, and I'm just really fucking confused as to why younger traders or newer traders think that this is the way to do it. Because the goal as a trader, it's not to make money. Like, yeah, initially, like, you don't know what you're doing. Like, you don't even statistically know that you're profitable. So why are you trying to scale up and like make money when you literally don't, like, when you're not profitable? I don't know. It just doesn't make any fucking sense. It's like it's literally like people that go to a casino. Like, why are you going into a casino when you logically know that the casino has a statistical advantage over you, and over a longer enough period of time, they are going to win against you, and you are going to lose your money against them? It just doesn't make sense. So why don't you maybe, I don't know, start with a $100 account and just kind of do little tests, or even, you don't need to start with a simulated account because it's not fucking real, so it's not going to feel like a loss isn't going to really fucking matter unless you can actually gamify it in your head. But what people should be doing if they're starting out as trading is start with a $100 account and just take like little 1% risk trades, like, so when you want to take a trade, I have a preloaded example for you guys. So let's say that we have let me pull up my fucking marker here. Okay. Let's say that we are trading with a $100 account. This is our account size right here. Okay. Oh, you guys can't see it because my fucking cam. I'll move it. Guess where it's going to be? Right here. So let's say we're trading with a $100 account. Okay. It's $100 fucking dollars. $100. So we are going to take 1% risks. That's what we're going to do. So this is going to be 1%. This is 1%, guys. Okay. And then this right here, I think this is a 4-hour trade. So this is going to be a 4% gain right here. How nice, right? And this is a safe little trade to do. This is a good trade to take because we're only risking 1% to make 4. And what's great about this is that because we only have a $100 account, it doesn't really fucking matter. But because it's real money, it's still going to feel like an actual loss, especially if you want to become a profitable trader. And this is what you should be doing rather than taking these. I've just seen so many fucking people that don't even know how to structure a goddamn fucking trade. It's like, what are we doing here? We're going to take a 0.9R trade. Like, let's enter here with our stop down here. And then we'll risk, like, what would this be then? It'd be like a fucking, I mean, you'd be risking like fucking $3 to make $3. I don't know what it is, but like, it's just absolutely fucking retarded. And I don't understand why people don't understand how to structure a fucking trade. It's like bet like a logical human being. Like, make sure that your risk is lower, at least 2 times lower than your fucking reward. If you're going to risk $2, at least make sure you're making 4. At least make sure you're making 4. Fucking easy, guys. So anyways, I don't understand why people are buying fund accounts thinking that this is the way to become a trader. It doesn't matter if you make money initially, because you're not going to be a fucking professional trader or a profitable trader overnight. It just doesn't happen. It's going to take at least, like, if you have a good mentor, I've heard 2 years you can do it if you really fucking put in the time and effort. You can do it in 2 years. But even from the one Lance B, one of the most profitable traders of SMB Capital, You know, he said there's a 2 year learning curve to trading, and so you better be prepared for that if you're gonna start fucking doing it. Trader XO even says, you know, you can do it in 2 years, but you have to really put in the fucking work. Just like I just said, I got that from him. You have to really put in the work, and you have to have a good mentor. And so trying to just like force your way to be a profitable trader in like 10 fucking days, or thinking that just because you're good at some things, or like, you know, things are easy for you in real life, you know, everything that you do is easy, right? Okay, well, me too, you know, like I haven't really struggled with a lot of things except for trading, but there's a huge fucking learning curve, and you have to accept that, and you have to be okay with not being there overnight. You have to think of it as a process, you know. Don't think of the outcome. You got to think of the whole fucking thing from A to B. All this in between is what matters. So, if you aren't profitable, don't buy a funded account. You know, unless you really want to gamble and you want to just try to make some money. But it's important to note, if you want to go that route, what the statistics are of profitable traders on breakout, or funded traders on breakout, because just because you're funded doesn't mean you're fucking profitable over a long period of time. So let me show you something real quick. I'm going to show you some statistics. So the pass rate on these challenges is 3 to 10% is the most realistic range. The median estimate is 5 to 7. So that literally means that 93 to 97 out of 100 people who pay the evaluation fee are not going to get fucking funded ever. So unless you think you're him, or you just get lucky, you're not going to fucking do it. It's not going to be possible. Unless you are statistically profitable, then you can probably fucking do it, because, well, objectively you are profitable. You can go into that casino and you can run their fucking pockets easily. The people who lose their account quickly are these people that don't do what I just told them to do when we were looking at the trading view chart. So 50 to 70% lose the funded account before the first payout because they're trailing drawdown violations, one volatility spike because they're over fucking leveraged in their risk, or they just go on an average losing streak, which is like completely normal. So unless you can really structure a trade and risk about, like, you know, 1% or even lower than 1%, zero to, I don't know, let's say 0.2, 0.3% per trade. If you just go on a normal losing streak, you're fucked. And there goes your however much money you just spent on that funded account, or the chance to get funded. My bad. So from the original 100, only 1.5 to 3 traders even reached that payout window. So think about that. 1.5% of people that click that "give me my funded account" button are getting funded, which is a fucked up statistic, because the prop firm is literally making money. Like, they are, think about this, right? That prop firm is only going to stay profitable if you keep losing, just like a casino. So it doesn't really make sense to go and do it. Now, does it? So this point number 5 is really important, I think. So among traders who get payouts, most last only 3 months, very few survive 6+ months, and only 0.1% maintain long-term funded status. That means that only 0.1% of people that are getting funded on these accounts are actually profitable, like over a long period of time. So I'm gonna get out of that real quick, and I'm just gonna show you like how to actually do this if you want to go buy a prop, or go buy a funded account, and buy the chance to get a funded account. So I have this sim account loaded up with it's 50K, as you can see. Let me go over to it's at 50K. All right, so it's a 50K sim account with 5x leverage. So if we were going to actually properly do this, right, and we're not just gonna risk it all on one fucking trade, because what I'll show you what that looks like. Let's do a moderate 25%, guys, a moderate 25%. So what that looks like now is we make, okay, we can get 6K. We can get funded, right? We can get funded if we get this. But if we don't, we lose. We're already down. Like, we only get, like, what, after this we only have like about 2 more chances maybe. Because we can, yeah. So we get funded, but the max drawdown is 3,000. Yeah, no. So we have like literally maybe one more chance after this if we want to do the same fucking thing. If we want to risk 25%. So how about we crank it down, right? Let's crank it down. Let's go to 10%. Let's see what that looks like. Okay, great. So, a little bit better, right? We can almost get funded, right? We're halfway to getting funded if we hit this trade. But we still only have about 3 more chances until we lose our account if we were to continue with this structure of risk. So let's go down a little bit more, right? Let's go to 5%. 5% account. That's more like it, isn't it? That's more like it. So now we only need to do this 5 times if we were to win every single one of those times. And we only lose $349. So not that much out of our account, not that much at all. So we could essentially be losing, what is that? Like 10 times, lose about maybe 9 times before we blow up, I think. Maybe, or is it less than that? I don't know. But sounds about right. So I would preferably even go lower, down to 3. And let's look at that. Great. Now we can take so many more chances if we want to actually do this the right way. We can take so many chances, and if we can just solely focus on A+ setups and do this, then we don't have to worry about any variance, right? Because if we lose, oh well, we still have so many more chances to fucking get funded. And if this works, it's $720. And let me show you what this would actually look like, right? It's the same thing that I was going over previous. I want to get rid of these little guys first. Even though it doesn't necessarily matter. But so if we're only risking, like this is about a 4 hour setup, as you can see, 3.69. So 3.6 R, whatever. And we are risking 208 to make 720. So let me write that down. 208, 720. That's a 2. And this is a higher probability setup too. This is just a 0.75 reversion strap. So we're just making the assumption that price is going to revisit the 0.75 of this trend or this push up. Right now it seems to be going on the 0.5, and this is a 4-hour time frame, by the way. But it seems to be going on the 0.5 right now. Who knows if we're going to get the 0.75? We don't know. And another thing that I think people need to fucking realize when they're trading is that the market is unpredictable. Not a single human being can predict the market, because if they can, they're acting on insider information, or they have a crystal ball. That's what it's called, a crystal ball, and they can see the fucking future. Okay. Professional traders can't see the future. They are good at looking at specific areas where there is a high probability that there is going to be a inflection point in the market. Okay. So, for example, let me show you this real quick. Okay. The yearly open is right here, right? It's pretty much in a range between the yearly open and the previous month low. So our range is going to look like this. I'll turn this off so it's a little bit less clutter. So our range essentially looks like this. This is our subjective range right here. Okay. So as you can see, price initially does a drive up to it. Bam. Great. Okay. It retests the 0.75 of this trend right here. This is a 0.75 retest. I mean, I'll put it down, but you can probably visually see it anyways. So yeah, it's a 0.75 retest. Okay, great. So it goes to that, and then it goes to another push at the high. This is the yearly open right here, by the way. And it hasn't gone down and retested the 0.75 to continue making a trend, but it's retested the 0.5. Okay. If you wanted to, you can take a fucking trade where you want to do the 0.5, but it's just, let's just focus on the higher probability one, I guess. So if you wanted to structure it this way and just do a nice little retest, a good high probability setup, and you take this, even if you win, you have to do this so many more. I mean, not so many more times, but you have to do that so many more times until you get to the point where you have made $5,000, and you can't lose at all during that time. You can't lose. Otherwise, even if otherwise you're going to have to continue to win more. So the odds are just stacked against you. And especially if you don't know what your statistical edges or expectancy or win rate is on any given setup, then what the fuck are you doing? So I guess this is just really like a public service announcement to not fucking do this if you want to be a trader and you want to be profitable in the long term. You know, this isn't the way to go. The way that I do it specifically is I'll show you the journal that I have going. I'm not profitable right now, but so all the red losses, obviously. Um, but this is my journal right here. I have a different one in Excel, but I recently got Edgewonk, so this is what I'm working with right now. Um, but to properly structure trades, start with a $100 account or just a low amount of money and just take little shots and just like test your strategies, man. It's not all about making money. It's about having a positive expectancy over a long period of time, over 1,000 trades, over the next 10,000 trades. You know, you don't even need a high win rate. You know, you can have a 35% win rate for a given strategy. And as long as your expectancy is positive for that, you'll be good. You'll be profitable. You know, as long as you can stomach the amount of losses before you get a big winner, then that's okay. You know, you can have a strategy that has a 35% win rate as long as you can stomach those losses. So just take, for example, what I'll do on the chart right now. So imagine that this is your strategy, right? You take a long, you take a long right here. Okay. You're holding from up here. This is what it looks like. Your structure is like this, you know, we'll put it right there. So that's where your stop is. Okay. Let's say you're holding it all the way up here because you think that Bitcoin is going to rotate back up to the 125s and this isn't the top. Okay. Let's assume that. You get stopped out. All right. Well, the cool thing is that if you structure your risk properly and you know how to manage it the right way, it'll be okay if you get stopped out here. It'll be okay if you get stopped out it'll be okay if you get stopped out right here and you think it's going to go back up to the highs, but it doesn't end up going back up to the highs. You end up getting stopped out first. It's going to be okay because your risk is always going to be lower than what your winners are. And if you can get a system where you are structuring this properly, structuring your trades properly, it'll be okay to take another loss, another loss, another loss. And then till finally, you know, maybe you decide to flip fucking bias for one time. Maybe you decide to flip bias. And so you short right up here. You short on this right here. And then your stop is up here, right at this high. So, and you're going to say, you know what? I've been getting fucked on these longs, so why don't I just take it all the way down to the bottom of whatever. I think this is like a 7 week comp. So you're going to take it to the bottom of the range right here. Bam. Fucking finally. Absolutely massive trade. A 6R trade right there. Huge winner, right? And if you know how to scale into it as well, so let's take, for example, you know, you put in your first chunk right here. Bam, first chunk right there. All right, it's starting to push in your favor. Bam, you do it again. You see it pushes up, but it can only clear right here. You fucking put more money in. Now your average entry is down to, I don't know, probably right here. So now your average entry is down to right there. But you're going to effectively move your stop up with it. So you're still risking only that much. Great. That's how you just scaled into a fucking trade and you're still getting a 5R trade if you let it run. And let's say you don't take profit there, right? So let's say you take it even farther down and you keep holding it and you just keep holding it and you finally get it in the right direction, right? That's what really fucking matters right there when it comes to trading. It's not about how many times you fucking win. It's not about how much money you are making in the short term. It's about creating a system where you can have a positive expectancy over the long term. And if that system has a 35% win rate or a 40% win rate or a 25% win rate, that's okay as long as your discretionary system has a positive expectancy, because that's what matters. And that's what's going to make you profitable over the long term. That's what's going to allow you to take money from the casinos over the long term. So unless you are statistically profitable and you can go into one of these prop firms and you can objectively know that because I am profitable on paper, statistically, I can pull out money from these fucking casinos at will. If that's not you, then do not buy a funded fucking account if you are trying to become a profitable trader. You need to stop thinking about trading in terms of P&L and think about it in terms of process over a long period of time, a very long period of time. And you need to journal your fucking trades. That's it.